Thanks for joining us. I want to introduce Beth Goldberg. She is the New York District Director for the U.S. Small Business Administration, joining us now to talk more on the Restaurant Revitalization Fund and to really explain how people can benefit from other resources the federal government has to offer, but then also dig a little deeper into who actually received the grant money from the RFF. So just to start off, can you outline for us, just define what is the RRF, excuse me.
The Restaurant Revitalization Fund was a program created in the American Recovery Act to provide support through a grant program to restaurants, broadly defined as people serving food products and beverages to the public. It was an opportunity for most food-oriented restaurants, companies, bars, bakeries to apply for a grant. And primarily beside their corporate structure, to make sure that that was part of the eligible activities, they had to show that they were impacted by the pandemic and their sales.
Okay. How many businesses benefited from this grant program?
Across the nation, just over 100,000 businesses.
Okay. And compared to the number of applicants?
I don't have that number in front of me, so we'd have to get back to you on how many people applied, if we have that information.
Got it. So the intent of the RRF is different than the PPP loans, correct? Can you just explain the difference in how you hoped it would benefit businesses?
The PPP loan was to keep people employed during the pandemic and to support all those payment costs related to employees as the primary objective. Health benefits, insurance, their direct salary, with some expenses going to other expenses that a business ran. And any business, again, there were certain restrictions, but virtually any business could have applied for the PPP. In round one, there was just an application. In round two, there was a qualification of further decline in revenue. The RRF was specific for the restaurants, food and beverage industries.
Okay. In terms of your role in making sure that businesses were able to receive the money, that were eligible for it, how did you facilitate that interaction?
So the district office facilitated that through tons of webinars and our resource partner network. So our district office does not do one-on-one counseling, but the federal government provides funds to not-for-profits, small business development centers. We have 12 of them in the district located on college campuses, and our volunteer network of SPOR volunteers who were operational and doing advising to businesses on a daily basis virtually, even during the height of the pandemic. Those services are provided free to anyone in the district, and their resources across the whole country, supplying those counselors to the businesses, to the entrepreneurs, to help them with their applications.
Okay, but in your specific role, how did you work throughout that time to make sure people were connected the way that they should be?
We did it mostly through webinars with our major, the City of New York, the Office of Evening Entertainment, City Council members, state assembly members, state Senate members, our congressionals and our U.S. senators, and numerous not-for-profits and chambers of commerce throughout, and industry-related groups throughout the country.
So, and it's my understanding...
Throughout the district, I'm sorry.
That's okay. So it's my understanding that this was part of the American Rescue Plan. So could you just break down who pays for a grant program like this to help support small business?
It's taxpayer money that is it deems that small business is important to the American economy, same as the Small Business Administration. 31 million small businesses across the country, 1.6 million small businesses in the New York district, which includes Long Island and the lower Hudson Valley, 550,000 businesses in the city of New York in the 5 boroughs. We are an important economic driver, and as the SBA was delegated the responsibility by Congress and various pieces of legislation, we were at the forefront of aiding the recovery during the pandemic.
So I just want to pivot a little bit to the people who did receive that grant money. Originally, when we started this conversation, we spoke a little bit about who wasn't able to get the money because either the funds ran out or because of ongoing lawsuits. But aside from that, the information we did receive, we got information of a list of businesses that did receive grant money in June and then another one in August. We went through and we compared both of those lists. And when you go through each business within both of those lists, you see that there's a little over 700 businesses that appear in the June list that disappear in the August list. In New York alone, it comes out to around 46 small businesses. And if you tally up the grant money, it's upwards of $7 million. Do you have any idea of where that money went?
I do not, but in any program with a grant or a loan, an offer is made and people have to accept it. So I have no idea what happened to that $7 million. I'm sorry about that.
So if we did go through and we actually looked at a few of the different businesses that are missing in New York specifically, some of them just appear to be regular residential homes that you can see on satellite imagery. Is it possible that there's maybe an internal audit that the SBA went through and realized these people shouldn't have received that money?
I'm not knowledgeable about that, Sabrina, and I really wouldn't comment on the closing of, any loan or any grant. I'm not involved in that process. That's all regulatory.
Okay, so
interrupt. Beth will not be able to comment, nor can any non-political SBA official, meaning a career official, cannot comment by long-time agency regulation on any individual awardee or applicant or borrower, for that matter. The updated data, just to provide information for you, since maybe I didn't brief Beth on that. The updated data reflects decline. So if all RRF data publicized reflects approvals, not final awards, and that's made clear on the website. It's much like the PPP data, which reflects approvals, not disbursements. Those were through third-party lenders. So if somebody declined an award, they would no longer be on the list.
Okay, so if somebody did decline the award and that the money went back, in theory, to the federal government, what would then happen to those funds they should have received?
It would be, my understanding, it would be freeze the money up to go to somebody else.
Okay. Is there any way that we can figure out where that money went? I mean, $7 million is a sizable amount of money just in one state alone.
Yeah, if you could, just follow up with me and note the specifics, and I will check with our RRF team down in Washington and try to get you an answer in time for print.
Right. I mean, we have the number that the entire allocation was dispersed and ran out of money. So, but what you're asking very specifically, like, I don't have the answer to that. What happened to Jane's money when?
Yeah,
right.
by the way, on all the different the FOIA documents, it's as of a certain date, and as many in the media have learned, that our data is very dynamic. Because of individual small business owners' business decisions, their own decisions, whether or not to accept, to sign, to close on an award, a document, whether or not to process a grant or an award or a loan. It is mostly dynamic, and the information is accurate as of the date it is published.
So is it possible, without commenting on any specific person's situation, is it possible that the SBA went through and saw some of these people might not have been truly eligible to receive this money and rescinded it? Or is it just that all of these people you're saying would have declined the grant money they were given?
I can't speak specifically to the situation. I'm pointing that out as to a general concept. We in the field are not involved in the program management of the award. I need to check with the SBA Office of Capital Access in Washington, which I will gladly do if you send me the specifics.
Okay.
Yeah, that's something we wouldn't have access to, Sabrina, to know that on a one-on-one basis. As a lender.
Okay.
You make the offer, you make the offer, and sometimes people read the details, and they go, oh, this isn't for me, or, I might not survive the audit. There are a lot of reasons why people don't accept the money, right? But we can't, just can speak from experience, but not from this specifically.
Yeah, I mean, hypothetically, and this is only a hypothetical situation, somebody could have been awarded a shuttered venues grant. I mean, and that would make them ineligible for RRF money,
right.
So it obviously will vary on the applicant, but you can send me the list and I'll see what I can discern from Capital Access.
Okay, we'll definitely do that. But hypothetically, if someone did close or became ineligible, would the SBA be responsible for finding that out through some sort of audit process, or are they keeping track of the people that get this money to make sure that the money that either they receive or don't receive doesn't go missing or get lost in the shuffle, that it could go to a business that really does need it?
Well, there are front-end compliance checks done on all applicants. In fact, the team that the Biden-Harris administration brought in to run the second draw PPP loan and their front-end compliance checks to ensure integrity of all applicants submitted by lenders was actually tapped to lead this team with the RRF. Many of the same best practices that the second draw PPP team implemented after January, forget the date that the second draw opened up. Once PPP closed, and even during the process, that team shared with the RRF team basically the same protocols and processes to ensure the integrity of taxpayer dollars, and that all applicants were making good on their applications. Lying to the federal government or misstating purposefully anything on an application is a federal crime. Everybody does sign that when they apply for a loan or a grant with the SBA, much like they did on the RRF and PPP applications.
Okay. Beth, I know you have similar experience dealing with not just obviously the grant program we're discussing right now, but grant programs in the past. From your experience, when there is leftover money based on somebody declining that money, or if the money was not specifically meant to be for them, does that money get reallocated? And can you see that happening now, where businesses in New York could benefit from that kind of influx in cash?
So in grants general, we can look that the agency's going through a process right now with SVOG. There was some money left over and they're doing supplemental awards. SBA has not historically been a granting agency other than to our not-for-profits, and I do believe that large granting agencies do work in general. Private not-for-profits, foundations do work with making sure if they've made an award that the money, if there's extra money, normally either gets taken back and recirculated for another use or will be reused in the program. At this point in time, the awardees of the RRF have until early 2023 to expend their funds So it's not something that that we're likely to see in the immediate future about what happens with that money.
Okay. Does the SBA have any knowledge of where the money given to a business might go? We've actually spoken to a few people that have said the grant money that they did receive, instead of it going into their bank account for them deciding how they would invest it, it actually went directly towards paying their taxes. Not PPP repayments, those had been waived for those businesses, but it just went right to their outstanding taxes, which kind of defeats the sportsmanship, I guess you could say, of the RRF. Do you have any idea of how that might logistically work?
I have no comment on that.
Okay. And I do just have to ask, since we mentioned how money might be reallocated, do you see a path forward in terms of replenishing the RRF fund, or is that not something that you're also willing to talk about?
I would refer you to the New York congressional delegation on that matter. The SBA implements legislation passed by Congress, and at this point, we have no authorization for any future funding for RRF.
Okay.
Just if I could just butt in for a second to tell you how proceeds could be used. RRF proceeds could be used. RRF proceeds could be used for business payroll costs, including sick leave, payments on business mortgage obligations, business rent payments, business debt services, principal and interest, business supplies, construction of outdoor seating, business food and the beverage costs, if memory serves, and operating expenses as well.
Okay. So the idea that this person or these businesses weren't able to decide where that money went, that's not something that you just laid out. So is that kind of against the nature of the RRF, or is that something that was that a mistake?
What I don't know.
I know it's getting into a specific.
I don't know. Yeah, I know that it's getting into specifics, but I don't. I would disagree with your assertion there. Obviously, the business is deciding how they're using it. If they're choosing to pay taxes with it as a business expense, if they're choosing to, the business is making that decision. The SBA pays or provides the award directly to the business, or provided the award directly to the business.
Got it. So you haven't heard of a case like the ones that we've seen where they've literally received an email saying the money was directly applied to their taxes. They didn't decide to do that. It just happened.
Oh, I have not heard of that. I don't know specifically what case you're speaking of. We obviously can't comment on any individual cases. If somebody had an outstanding federal tax bill, that's something to bring up with the Internal Revenue Service.
Okay. Beth, I know you mentioned at the beginning of this interview that there were resources you wanted to shed light on that businesses could still take advantage of. Would you be able to outline some of those?
For those businesses, especially the ones that are struggling or micro businesses, they should be aware that they can get free counseling at any one of those centers that I spoke about, which is the Small Business Development Center and SCORE. In addition, New York is fortunate that we have several not-for-profits that provide counseling and also loans. They're made through the not-for-profit. And just today, Sabrina, I don't know if you got the press release right before we issued 3 prime grant awards for $600,000 to 3 not-for-profits in the city. Ascendus, the Business Outreach Network Center, and Start Small, Think Big. 2 of them offer direct lending. They're not-for-profits, not part of what people would consider our traditional lending network. And the others provide some free legal counseling and other resources for businesses. These not-for-profit lenders that we're fortunate to have in the district, and I forgot to mention our women business centers, SCORE and SBDC, have all had an increase in counseling during the pandemic. And we're actually quite surprised to see how many new entrepreneurs are coming through our doors seeking counseling and money, both in the not-for-profit and in the our traditional lenders of credit unions and savings banks and commercial lenders.
Okay. All right. Beth Goldberg, thank you so much. The New York District Director of the U.S. Small Business Administration. I do appreciate you joining us and helping us break that down, and we'll definitely be in touch about trying to figure out where that money went.